I need you to pay very close attention to what I'm about to explain. Turn off distractions. Put your phone down. This is not entertainment. This is a massive warning that could determine your financial fate for the next decade and beyond. The smart money, the top 0.1% of stackers, the institutional players who always seem to be one step ahead, they already see what's coming. They've been quietly positioning themselves while the mainstream media keeps the public focused on distractions. The question is, will you act before it's too late, or will you be left asking yourself why you didn't listen when you had the chance? Let me explain exactly why time is running out. The silver market is experiencing a convergence of factors that I have never seen before in my decades of analyzing precious metals. We're not talking about one bullish indicator or two. We're talking about a perfect storm: supply deficits, industrial demand explosion, monetary chaos, geopolitical instability, and an awakening among investors that fiat currencies are failing. Each of these factors alone would be significant. Together, they represent a once-in-a-generation setup that is rapidly approaching its inflection point. The global silver market has been in a structural deficit for 3 consecutive years now. Let that sink in for a moment. For 3 years running, the world has consumed more silver than it has produced. The deficit in 2023 was over 200 million ounces. This year, projections suggest the deficit will be even larger. Where do you think that silver is coming from? It's coming from above-ground inventories that have been accumulated over decades. And here's the warning that should terrify you if you're not already positioned. Those inventories are depleting at an alarming rate. The COMEX registered silver inventory, the silver that's actually available for delivery, has collapsed. London Bullion Market Association vaults have seen massive outflows. The silver that was supposedly sitting in warehouses, ready to meet demand, is disappearing. And it's not being replaced because mining production cannot keep up with consumption. This is not speculation. This is documented fact. The silver is being consumed faster than it can be mined, and inventories are the buffer that's being depleted to make up the difference. Now, small investors must watch this very carefully because there's a mathematical certainty here that cannot be avoided. When inventories run out, and at current rates of depletion, this could happen within the next 12 to 24 months, there will be no buffer left. At that point, prices will have to rise dramatically to ration demand and incentivize new supply. We're talking about a potential supply crisis that makes the current tightness look like a minor inconvenience. Those who wait until this crisis becomes front-page news will find themselves competing with panicked buyers for a metal that simply isn't available at any reasonable price. If you see what I see, you understand that the industrial demand story for silver is absolutely massive and shows no signs of slowing down. Solar panel installations are accelerating globally. Each gigawatt of solar capacity requires approximately 2.5 million ounces of silver. The world is on track to install hundreds of gigawatts of new solar capacity annually, and those projections keep getting revised upward. Electric vehicles require significantly more silver than traditional automobiles. The electrification of everything, from transportation to grid infrastructure, is creating demand for silver that didn't exist a decade ago. And here's what makes this situation particularly acute. There is no substitute for silver in many of these applications. Its combination of electrical conductivity, thermal conductivity, and reflectivity is unmatched by any other element. When manufacturers need the best, they need silver. When engineers design cutting-edge technology, they specify silver. This isn't a discretionary choice that can be easily changed when prices rise. This is fundamental physics and material science. Silver will be needed regardless of price, and that inelastic demand is going to collide with constrained supply in spectacular fashion. But the industrial story, as powerful as it is only half of the equation. The monetary dimension is where things get truly explosive. You need to understand what's happening to the global monetary system right now because it has profound implications for silver. The Federal Reserve and other central banks have spent the last 15 years engaging in the most reckless monetary experiment in human history. They have printed trillions of dollars, monetized government debt, suppressed interest rates, and distorted every asset market in existence. The inflation we've experienced is not an accident. It's the direct and inevitable consequence of this monetary madness. And despite what the Fed claims, inflation is not under control. The year-over-year numbers may have moderated from their peaks, but prices are still rising. The cumulative damage to purchasing power is staggering. The dollars in your savings account buy 30% less than they did just 4 years ago. 30% of your wealth confiscated through the hidden tax of inflation. And this process is going to continue because the underlying causes have not been addressed. The federal government is running deficits of $2 trillion per year. The national debt is approaching $35 trillion. Interest payments on that debt now exceed the entire defense budget. This is not sustainable. Something has to give. Either the government dramatically cuts spending and raises taxes, which is politically impossible, or the Federal Reserve will be forced to monetize even more debt through money printing. There is no third option, and when that money printing accelerates, as it inevitably will, inflation will surge again, and the dollar's purchasing power will continue its relentless decline. This is precisely why silver is so critical to own right now. Silver is the anti-dollar. When the dollar is being debased, silver preserves purchasing power. When inflation erodes the value of paper assets, silver maintains its real value. When confidence in the monetary system falters, silver provides a safe haven that has worked for thousands of years. The top 0.1% of investors understand this. They've been accumulating silver for years, building positions that will protect and grow their wealth through the monetary chaos ahead. The gold-to-silver ratio is screaming at us right now, and most people aren't listening. Historically, this ratio has averaged around 40-1 to 50-1. During major precious metals bull markets, it often compresses to 30-1 or even lower. In 1980, at the peak of the last great precious metals bull market, the ratio reached 16-1. Today, we're sitting at levels well above 80-1. This means silver is hugely undervalued relative to gold. It means that when the next major move in precious metals occurs, and it's already beginning, silver will massively outperform gold on a percentage basis. I want you to think about what this means in practical terms. If gold rises by 50%, which is entirely plausible given current monetary conditions, and the gold-to-silver ratio compresses from current levels to 50-1, silver would need to more than double just to maintain that ratio. If the ratio compresses further toward historical bull market extremes, the gains could be even more spectacular. We're looking at potential gains of 100%, 200%, or even more. And these aren't fantasy scenarios. They're based on historical precedent and sound monetary analysis. Here's where the urgency becomes absolutely critical. The silver market is tiny compared to other asset classes. The entire annual mining production of silver is worth only about $25 billion. The investable market is even smaller. When serious money starts flowing into this market, and I mean institutional money, sovereign wealth fund money, hedge fund money, the price impact will be dramatic and swift. There simply isn't enough silver to satisfy a significant increase in investment demand at current prices. We've already seen glimpses of what happens when investment demand surges. During the silver squeeze movement in early 2021, premiums on physical silver exploded. Dealers ran out of inventory. Delivery times extended to weeks. And that was just a minor blip in the grand scheme of things. A brief surge of retail interest that the market could barely handle. Imagine what happens when institutional investors who move hundreds of billions of dollars decide they need exposure to silver. The market will break, prices will gap higher overnight, and those who waited will be left behind. I've been in this business for decades, and I can tell you with absolute certainty that the fundamentals for silver have never been more bullish than they are right now. Never. Not in 1980. Not in 2011. Not at any point in my career. The combination of supply deficits, industrial demand growth, monetary debasement, and relatively low prices creates an asymmetric opportunity that I believe will be looked back upon as the buying opportunity of the century. But opportunities don't last forever. That's what makes them opportunities. And this one is rapidly reaching its expiration date. The smart money is already positioned. The inventories are already depleting. The monetary crisis is already unfolding. unfolding. Every day that passes without action is a day of missed opportunity, a day of potential gains left on the table, a day closer to the moment when it becomes too late to buy at these prices. I hear from investors all the time who say they're waiting for a better entry point. They want silver to pull back before they buy. Let me be blunt. This kind of thinking will cost you dearly. Yes, silver is volatile. Yes, there will be corrections along the way. But the secular trend is up, the fundamentals are strengthening, and the macro environment is becoming more bullish by the day. Trying to time the perfect entry is a fool's errand. The perfect time to buy was yesterday. The second best time is today. The worst time is never. For those who understand what's at stake, the strategy is clear. Accumulate physical silver consistently and persistently. Build your position while metal is still available at reasonable prices and premiums. Don't try to be clever with timing. Don't wait for permission from mainstream financial media. Don't expect your traditional financial advisor to tell you to buy silver. They make no commissions on precious metals and have no incentive to recommend them. Take responsibility for your own financial future and act accordingly. Physical silver in your possession is the foundation. Coins and bars from recognized mints stored securely outside the banking system represent the ultimate form of financial insurance. This is wealth you can hold. Wealth that cannot be frozen by government decree. Wealth that cannot be inflated away by central bank policy. Wealth that will survive whatever financial storms lie ahead. The top 0.1% of stackers have been building these positions for years. They understand that physical metal is the bedrock upon which financial security is built. For those seeking leveraged exposure, carefully selected silver mining stocks offer additional potential. When silver prices rise, mining company profits can increase exponentially. A 50% rise in silver prices can translate to a 300 or 400% increase in mining company earnings and share prices. But understand the risks. Mining stocks carry operational, political, and management risks that physical metal does not. They should complement a physical position, not replace it. Now, I want to address the psychological barriers that prevent most people from taking action. Fear of being wrong, fear of buying at the top, fear of missing out on other opportunities. These fears are understandable, but they are preventing you from making a rational assessment of the situation. The facts are clear. The fundamentals are compelling. The macro environment is extraordinarily bullish. If you see what I see, fear should be driving you to buy, not to hesitate. Consider the alternative. Consider what happens if you don't act and I'm right about what's coming. Silver doubles, then triples, then goes higher still. The dollar continues its decline. Inflation erodes your purchasing power year after year. Your savings, your retirement accounts, your paper assets, all losing real value while silver holders preserve and grow their wealth. That's the cost of inaction. That's the price of waiting too long. That's what's at stake right now. And consider this, even if my timeline is off by a year or two, even if the move takes longer to develop than I anticipate, what's the downside of holding silver? You own a tangible asset with 5,000 years of monetary history. You own something with growing industrial demand and constrained supply. You own real money that cannot be printed into oblivion. The asymmetry of the risk-reward proposition is extraordinary. Limited downside, enormous potential upside. That's the kind of setup that prudent investors dream about. The window is closing. I cannot emphasize this enough. The conditions that have allowed silver to remain at these relatively suppressed prices are changing. The inventory depletion continues. The industrial demand grows. The monetary situation deteriorates. Each passing month brings us closer to the inflection point where prices break out of their trading range and begin their ascent to levels that will shock those who aren't prepared. When that happens, not if, but when, there will be no second chances. There will be no opportunity to buy at today's prices. There will only be regret for those who didn't act and satisfaction for those who did. I've seen this pattern play out before. I've watched people dismiss warnings only to realize too late that they should have listened. I don't want that to happen to you. I don't want you to be one of the masses who look back on this moment and wonder why they didn't take action when they had the chance. This is Peter Schiff's red alert for silver investors matters. The clock is ticking. The fundamentals are aligned. The opportunity is now. Time is running out. Every day you delay is a day you may later regret. Every excuse you make is a barrier between you and financial security. The information is before you. The analysis is clear. The only question that remains is whether you will act on it. I urge you, I implore you, to take this warning seriously. Do your own research, verify the facts I've presented, and then take action. Buy silver while you still can at prices that will seem impossibly cheap in hindsight. Position yourself on the right side of what's coming. Join the ranks of those who saw the warning signs and acted decisively. Your financial future is in your hands. The time for deliberation is over. The time for action is now. Don't let this opportunity slip away. Don't be left behind. Act now before it's too late.